You're happy, Tim. Just like to welcome you to our webinar this afternoon on predefined income strategies. My name is Rob Hodson. I'm one of the senior advisors at Holborn Assets. And joining us is one of our trusted business partners, Tim Haywood from Walton. We should be about 30 minutes today, if that's okay. And if you'd like to put any questions into the Q&A section, we'll do our best to work through them, but we will follow up with you individually with any questions, and if you'd like to have a follow-up meeting with Tim. And with that, I'd like to hand over to Tim.
Perfect. Thank you, Rob. And good evening, everybody, from wherever you may be joining. My name's Tim Haywood. I'm the Managing Director of Walton Group here in the Middle East. I'm based in Dubai. And just before I go into the presentation, I've give you a little bit of background to myself. I've been with the Walton Group for over 15 years. Started with Walton in Hong Kong and relocated to the Middle East at the end of 2019 with my family and to open our first Middle East office here. So we're based in Dubai and very much on the ground. What I'm going to do is take you through a relatively short slide deck to give you an introduction to the Walton Group of companies, give you an understanding about who we are, what we do, and some of the opportunities that we have available right now. Walton Group is a private family-run business set up in 1979, so we've been in business for over 43 years. And we are a real estate asset management company who focus on specifically land asset management. We have around 98,000 acres of land under administration in North America, with the vast majority of that being located in the United States. And we are very much US-centric in terms of our land acquisition model. We have about 3.4 billion of assets under administration, and we've returned throughout our history in excess of $2.3 billion back to our investors, which is quite a phenomenal amount of money. Just to give you some idea in terms of the exit activity that we see right now, we are expecting in 2022 alone to deliver in excess of $500 million back to our clients. So it's been a very active year, and we're excited to bring those returns to our investors, of whom we have many, over 95,000 investors across the globe, and we continue to service those investors throughout our various locations in North America, in the Middle East, as well as in Asia. So what do we do? Well, Walton's business model is to offer a fully packaged US land investment solution and partner with the top publicly traded home builders in the United States, whilst targeting a 12 to 15% per annum IRR, focused on delivering annual cash flow distributions to our investors. Now, that's a fairly simple statement in a nutshell. How we actually achieve that is a little bit more detailed, and that's what I'm going to take you through this presentation. So some highlights of the investment. It is asset-backed, and what I mean by that is it is secured by land title, freehold land title in your own name. So $50,000 minimum investment, and it provides an opportunity for you to diversify your investment portfolio and even your real estate portfolio, and to participate in what is the largest housing market in the Western world. The US real estate market is very mature, it's very robust, and notwithstanding some of the natural cycles that we see in all housing markets, it is a very strong market. There's no debt on the land, and therefore we're not borrowing from banks or institutions to go and acquire the assets. We do so on an all cash basis, and that means we're not subject to interest rate fluctuations on borrowing, and we're certainly not subject to cash calls from those institutions. So it means that we can take a patient approach, and what we look for is patient capital for investment. We've been in business a long time, and we've delivered a historical average annualized return of 12.23% per annum. Now, just to be absolutely clear and transparent here, that is a track record based on a historical model, and our historical model was what we would term as a buy and hold strategy. It did not encompass cash flow or income generation, but nonetheless, it's part of our history and we're very proud of it. But I will talk about our track record for our current product line a little bit later on in the presentation. We are also a Sharia compliance investment, as endorsed by Amini Advisors out of DIFC here in Dubai. Again, for this region, it's an important tick box to have. We're very pleased to carry Amini Advisors endorsement, and you'll see that across our literature. So as a land asset management company, what do we actually do? Well, of course, understanding where land fits into the real estate life cycle is crucial to understanding where Walton's model operates. And of course, land is the basis of all real estate. Everything begins with land. So Walton's expertise is through the research and acquisition and structuring of land-based assets for investment purposes across many different facets, whether it be high net worth individuals, whether it be institutional partners, or whatever it might be. But when we look at the real estate life cycle, understanding where Walton fits into that is crucial to understanding the investment model. So when we look at the real estate life cycle, of course, we understand that pretty much all development begins with land in stage one. But it's about researching and acquiring path of growth land assets which lend themselves to cost-effective large-scale residential development. Because what we do in a slightly unique way is that at that point, we bring in the major publicly traded home builders. And those home builders sign an exit-focused letter of intent, which provides them with exclusivity on the asset and allows them to start spending money and time and resources in preparing the land ready for stage two. And that is when they will take that land down from our investors, either on a phased basis or a bulk acquisition basis, and they will then get their hands dirty, putting the water, the sewer, the utilities, all of the infrastructure in place and creating a fully serviced development lot. And on that fully serviced development lot in stage three, they then start to build homes. And of course, then they sell those homes, and what you're left with in stage four is a fully developed out community. So Walton's expertise very much lies in stage one. And so our investment philosophy is all about the research and acquisition of land in the path of growth. And again, we partner with those top publicly traded home builders to provide assurances to our investors that there is demand and appetite for that land from a particular home builder. Those home builders are many and varied. We deal with the top home builders in the United States, the top 30 home builders. We have relationships with the vast majority of those. But of particular note would be the top two home builders in the US, which you can see on the left-hand side of your screen, D.R. Horton and Lennar. Now, they are the top home builders in the United States. They are both publicly traded home builders. D.R. Horton alone has an in excess of $20 billion market cap. And between the two of them, they have about 20% market share of the home building business in the United States. So described another way, 1 out of every 5 homes sold in the United States is a D.R. Horton or a Lennar home. So, you know, they are absolute powerhouses. They are production home builders in the US, and we're very proud to work with them. On the right-hand side of your screen, you can see a number of institutional partnerships named, and that is because over the years we have dealt with various institutions, which is more of a credibility statement for this purpose more than anything else. But when you're dealing with some of the biggest investment funds in the world, some of the biggest pension funds, then of course it means that we are meeting their strict criteria in terms of due diligence. So our pre-development land investment strategy is a 5-stage process. And the first, as I've alluded to already, is all about due diligence, where in stage 1, we research and acquire those path of growth land assets. And we share that due diligence with the publicly traded home builders with a view to getting them to move in to sign an exit-focused letter of intent. And once again, that letter of intent provides them with exclusivity, and it means that they're comfortable in spending money to advance the planning on the project and working with Walton hand in hand to prepare that land ready for exit. Once we've acquired the asset, we then syndicate the land to our investors around the world. And that is working with our partners such as Holborn to bring these opportunities to the marketplace. And what investors are participating in is a direct land investment where they hold undivided interest title, which is a fractional ownership interest in the project. And Walton is appointed as their agent to act on their behalf all the way through the process. And that means that we liaise with a home builder and we bring them to stage 3, where they're signing an where they're signing an option agreement or a purchase and sale agreement for either the phased or the bulk sale of the asset. And that is when we present a formal exit offer to our investors, who then vote to accept or reject the offer. And it's a 60% democratic voting process. And once that 60% threshold is reached, then it's binding on all investors within the project. Once that approval has been granted in stage 4, then it goes back to the home builder, who continues to spend their own money and time preparing the land ready for the exit, which then occurs in stage 5 through a bulk sale or a phased exit strategy. And I'll talk about those a little bit later when we look at the project specifically. But what you're looking at here, therefore, is an investment made in stage 2. You'd then have a 12 to 24 month period before you'd expect to see any kind of cash flow, depending on the project specifics. And then your cash flow would be generated through stage 5. And that would typically be for a period of 3 to 6 years, depending again on the project in question. In terms of the ownership and the title, then again, for a minimum investment of $50,000 US, you would be participating into an individual project, which I'll show you a little bit later on. And for that involvement, for that investment, you receive registered title deed, and hand in hand with that, title insurance, which is issued independently of Walton by one of the largest title groups in the United States. And what that title insurance does is it confirms your title is clean, it's unencumbered, there's no debt, no liens on the property. On the back of the sales and purchase agreement that you would sign, you would then be able to nominate beneficiaries. God forbid anything should happen to the investor during the hold period. And of course, as I've mentioned already, you retain the voting rights as a registered landowner, and Walton is appointed as your agent to act on your behalf. I talked about track record earlier. This is to bring you right up to date on our income model, which we launched in 2019. And since then, we've launched 27 exit-focused pre-development land projects for a total of 5,300 acres and around $237 million in capital raised. Of those 27 projects, 11 have now moved through into either draft or signed option agreement stage, and they have generated a multiple of between 1.46 times and just over 3 times. That is to say, for $100,000 invested, $146,000 up to just over $300,000. So they've done very well and they've performed very strongly. Just drilling down into those a little bit further, you can see the projects listed here. Those in yellow have actually received exit offers and have been voted upon by their investors. And there's a couple of things to point out here. One is the home builders involved along the way. D.R. Horton feature very prominently. And in fact, we've sold more than 50% of our assets to D.R. Horton, the #1 home builder in the US. But also you can see the original projected returns when we launched the projects to investors in the 4th column here. And next to that, you can see the actual multiples that we've delivered to investors based on the terms of the exit offer presented to them. And I think it's fair to say that we've done a pretty good job of managing expectations and underwriting these deals on a more conservative basis with a view to under-promising and over-delivering. And again, we've done a pretty good job so far of doing that. And where we haven't exceeded the original underwriting, we're very much in line with. So again, we're pretty comfortable with the way that we're approaching these assets. All of those other projects in white are still going through their various processes, and they will receive exit offers in due course. Now, I'm not going to go detailed into the US housing market. That's probably a conversation for individuals as we do the follow-ups. But what I will just talk about is where homes are being built, because again, on the basis that we've probably got a lot of non-US people on this call, and if we do have some US nationals, then welcome. I think it's worth just painting a picture of where you see demand in the US, because many people won't necessarily understand this. So in 2021, you can see that almost 60% of all homes sold in the United States were actually sold in the South, with 26% being sold in the West. And you're going to start to see a pattern emerging here as we go through these next few slide sets. Of the top 30 home builders in the US, all 30 of them were active in the South and 21 of them were active in the West. And as you can see here, the top 30 home builders account for more than 40% of all new homes sold. So that gives you a sense of the scale of these operators. And when you then add into the mix the likes of D.R. Horton and Lennar, who account for 20% of market share between just the two of them, you can see that it's quite heavily dominated by certainly the top 10. So it's no great surprise, therefore, to see all of this home building and home sales activity, to understand, therefore, where Walton focuses in terms of land acquisition. And so our strategy is very much focused in the Sunbelt states of the US, where you have strong population numbers, strong employment growth, and of course, strong home building activity. And so therefore you can see that our locations are highlighted here in orange, and that is where we are acquiring our various assets. The land acquisition process itself is quite detailed, but I'm going to save you the detail of it and really just summarize it with our key milestone process. This is all about due diligence and risk mitigation. We need to understand the land in its truest form. We need to understand the land not only in terms of the fundamentals, in terms of growth, but we also need to understand the physical attributes of the land as well. And so as we work through this process, we start off very much in-house, conducting due diligence, understanding the market analytics, and looking at the individual areas and the parcels of land themselves. And if anything doesn't make sense, then we simply walk away. We just eject the land from the pipeline. Once we get to stage 3, then we start spending money on external due diligence. And that starts off with up to $25,000 being spent and moves in milestone 4 up to another $250,000 being spent. So all in, we could be into the tune of almost $300,000 in due diligence spend. And we may still walk away from assets. And I think it's important to make that clear, because before you see any projects from us, this due diligence process has taken place. And only when we get to milestone 5 do we weigh feasibility and then move to actually acquire the asset itself. And at that point, you will then see us launching those projects to our business partners and therefore to you as well. So with all of that said, I'm just going to cover off quickly a couple of the current projects and give you a high-level overview. Again, I don't want to shortchange anybody here, but there will be follow-up opportunities. And if you'd like to sit down and go through any of this in more detail, then we're very happy to do so. The first project is a project called KELLOGG TRACT. It's in South Carolina. And to give you an overview of this project, it's about a 470-acre parcel. We syndicated the project with about just under $10 million available. We're down to about $1.3 million left. And we've signed an exit-focused agreement with D.R. Horton, again, the largest home builder in the United States, publicly traded entity. And we have a multiple exit strategy on this project, which will encompass a bulk sale, as well as a number of phased exits as well. With the projected cash flow being from 2024 through to 2030, and delivering a projected IRR of 13.69% for a 2.18 multiple. And again, without going into the nitty-gritty detail here, what I will just point out is just adjacent to this project, you'll note here the Highland Springs Elementary and Middle Schools. They are currently under construction, due to complete in 2023 and 2024 respectively. And again, for those that don't know much about the US market, what I will say is that when they commit to school infrastructure, you know, they are committing multi-million dollars to these developments. They are not small concerns by any stretch of the imagination. Opposite Kellogg, you'll also see there is a 1,300-acre master plan development, which has been approved, and that is going to commence construction imminently, and that is going to bring really a bit of a closure to this area in terms of available land for future development. And Kellogg will very much remain the hole in the donut of development in this immediate surrounding area. And that is exactly why D.R. Horton have taken a position here, because they do not want to run out of land in this market where they are very, very dominant. Just to demonstrate that, you can see that D.R. Horton have developments across the area here, 5 or 6 different developments. And one of the things they want to make sure is they don't run out of land, because again, you know, that will very much hamper their activity. But not only that, you can see there are other school districts, medical facilities, retail, amenities on the doorstep. And of course, this is very much a growth area. The exit focused agreement is signed with DR Horton as of March, and this runs through until March next year. And this gives DR Horton exclusivity on the asset. It means we can't talk to any of their competitors without their consent. And that means that effectively they've taken this asset off the table from their competitors in a highly competitive marketplace. Without getting too bogged down by the numbers here, what I do want to just highlight is that the cash flow of this project is going to be generated through the phase-by-phase sale of the lots or of the land to the home builder, and that is going to generate in excess of $21 million in deposits and phased payments. But if I just jump across here to the right-hand side, based on a $100,000 investment, you could see that the cash flow projected to come back into investors in each of those years is shown here. So it's a little bit back-end heavy because there is a bulk buyout of all remaining lots in 2030. But again, on a $100,000 investment, you can see the projected returns, $218,000 coming back for a capital gain of $118,000, generating a 13.69% per annum IRR and a 2.18 multiple. Again, if you want to get down into the nitty-gritty of these numbers, we can do so individually, but this just gives you a high-level overview of what those projections look like. The second project available, which is coming right towards the end of its availability, is a project called Soddy Daisy. Believe it or not, that is the name of the place. We have not named this project Soddy Daisy, but this is a project in Tennessee. It's a 186-acre project, again, proposed for residential development. And of the $7.4 million available at syndication, we are down to the last $260,000 available. Again, it's a DR Horton agreement signed, and this time it's for a phased bulk sale from 2024 through 2026, delivering an IRR of 15.16% and a lower multiple at 1.44 times because, of course, it's a much shorter duration. The exit focused agreement signed with DR Horton again as of June this year will run through until June next year, so it gives them that 12-month exclusivity period. And the cash flow of this project is a little easier to digest. It's a three-phased exit strategy in 2024, 25, and 26. And again, on a $100,000 investment, you can see cash flow of just under $50,000 coming back in those first 2 years. And then in 2026, the balance of $44,625 as the final payment, generating capital gains of a capital gain of $44,173. So just to finish this off, I just want to share with you our latest exit offer that we've just received. And this is by no means our best one. It's just that it's the most recent. And I think, again, in the current environment, it's worth just showing that we continue to see exit activity. And this is a project called Lincoln Avenue, which Holborn have got a number of clients invested into. This was a project which was syndicated last year in 2021, a 112-acre project. And it was originally proposed to be sold to DR Horton, who signed the exit-focused agreement between 2023 and 2027, again on a phased exit strategy, delivering a multiple of 1.77 times for a 13% per annum IRR. When we syndicated the project, it was launched and it was syndicated at $41,862 per acre. The exit offer that came in was signed with Journey Homes, in fact, not DR Horton, even though they were the original home builder. Journey Homes is a very strong regional partner in this market. And the exit offer came in at $111,000 per acre based on a $41,000 per acre syndication value. So when we launched the project, it was originally expected to be a deferred payment, a phased takedown with a duration of between 2024 and 2027 for an IRR at 13.2% and a net multiple at 1.7 times. What we've actually delivered is an exit offer based on a bulk sale in 2024. So right at the beginning of that original time frame. And because it's a bulk payment with no deferred or phased exit, that has generated a significantly higher IRR at 31% per annum. And of course, pushed up the multiple considerably from 1.7 times to 2.5 times. So it's been a very successful project. We're very pleased. And of course, overwhelmingly, we are receiving positive votes in favor of the exit. And again, that's just to share with you what we're seeing right now in terms of exit activity. So with that, that is the presentation. Thank you very much for your time. And Rob, I'm very happy to answer any questions there might be that have come into the chat room.
Thank you very much, Tim. We have got a couple of questions that have cropped up, quite interesting ones. The first one is your comments on interest rates in the US and how that impacts the model here, and how home sales in the US will be affected, in your opinion.
Yeah, absolutely. Great question. I know it's probably one that's on most people's minds and lips, whether they're investing in the US property market or the UK or anywhere else for that matter at the moment. Yeah, I mean, I think at the end of the day, for the last decade, the consumers have been, quite frankly, absolutely spoiled with historically low interest rate environment. And there was only one way that was going to go. And in a high inflation environment, as we see right now, the only way you can control that is through interest rate hikes. I don't think we're finished yet. I think we're probably going to see interest rates at probably 8% in the US. And the 30-year fixed rate mortgage right now is just hovering below 7%. The reality is that is going to squeeze some potential home buyers out of the market. They simply won't qualify for a mortgage. And that is a good thing, because what we don't want to see is free lending as we saw in 2006, well, 5, 6, 7, in the run-ups to subprime. Yeah. We want to make sure there is a much more responsible lending practice, and that is very true today. What it means for home buyers is they either have to move further away out of core urban centers into the suburbs where there is more affordability, or they have to downsize and actually, rather than considering perhaps a 4-bedroom, 2,500 square foot property, they may have to look at a 3-bedroom, 1,800 square foot property because it's affordable and they can get a mortgage on it. Or of course, they just hold fire and they rent. And that fuels the build to rent program that we see in the US, which you see an awful lot of institutional money going into. And of course, what that does for home builders is it captures a future home buyer, giving them a taste of living in a master plan community whilst they decide what they're ultimately going to do. So look, I think interest rates are what they are. They're not, 7-8% is not alien to us with slightly longer memories, shall we say? If you look over the last 50 years, 7-8% is not out of the ordinary. In fact, they've been much higher than that. So I think if they end up next year settling at maybe 6% as inflation comes down, then that's going to be what we'll be dealing with for the next few years. But I think that it's important to note that they will not stop building homes, and there will still be home buyers coming through. And the reason for that is simply because, the millennials want to buy a home, they're forming families, and they've got a lot of savings and they're in well-paid jobs. So, it's not all doom and gloom out there. Interest rates are what they are, but they'll continue to build and sell homes in the US regardless. Good.
Thank you for that. Our next question is, what is the minimum investment, and does it definitely have to be in US dollars?
Yeah, so minimum investment is $50,000 US, and yes, it is a US dollar investment. We acquire the land in US dollars, the investment is in US dollars, and we pay out in US dollars.
Okay, lovely. And while we're on that topic, somebody else has mentioned the tax treatment of the gains in the US. How does that work?
Yeah, so the tax treatment is quite straightforward. There are various mechanisms in place for non-US persons, which means that you are able to enjoy a federal tax, a federal tax-free allowance. of up to $41,000 in capital gains. And that means that any capital gain below that amount is ultimately federal tax free. But the US system works on a withholding tax basis for non-US persons. And so 15% of gross proceeds is withheld at source, subject to filing for recovery of those withheld amounts. And we provide a solution for investors through RSM Global Tax Advisors, who will do the tax filing for them. And that will cost them between $100 and $150 per year of filing. What I would say is that for specific client interest, we can share with them tax examples, and I think they'll be very pleasantly surprised. And in many cases, they get out paying virtually nothing in tax at all after filing.
Good, good. And Adam has asked, are there any early redemption options, or are you essentially locked into the investment until conclusion?
Yeah, you basically are. Yes, it's a buy and hold strategy, and it should be the last place you go for liquidity in your portfolio, I would argue. And I think, again, if the income strategy has kicked in and you're starting to get the payouts, the question would be, why would you want to encash it? But in absolute emergency situations, it is freehold title, so it's freely transferable, but you would need to find a buyer to take the asset off your hands, and then it could transact. We don't go out there and help you find a buyer for it. So if you are in an emergency and you need to sell it off, then find a buyer and we can help you transact, but it should be a buy and hold strategy. Good,
all righty. We haven't got any more questions, but if anyone else would like to add anything in, please do, and we'll try and answer it. But failing that, I'd just like to thank everybody for joining us today. And as Tim and I have said, we'll follow up with you individually to answer any of your personal questions you might not want to put in the question and answer chat. And once again, thank you very much.
Thank you, everybody. Thank you, Rob. Good to speak to you, and take care, everybody. Have a good evening.